Wednesday, September 4th, 2024, Monaco 64, home of alternative economics and contrarian views. So about a month ago, the yen carry trade caused troubles for the whole world's financial system. And by carry trade, I mean the unwind of the carry trade. And I think these troubles might be resurfacing. And there is, of course, a lot of talk about the U.S. economy being in trouble or kind of slowing down. So we had a pretty big day yesterday in the markets. I noted in yesterday's video that the markets were probably going to stay fairly quiet up until Friday when we get the U.S. jobs data. But I was wrong. Anyway, that's what we're going to look at today. The markets, the yen carry trade unwind. And if you don't know what that is, you should refer to my playlist about the Japanese yen carry trade. I'm going to put it up here in the cards. I've done countless videos on it, and the last time I spoke about it was beginning of August. Prior to looking a little deeper at what happened in the markets and the yen carry trade, just wanted to thank all of you for your interest in the channel. The subscriber count has been growing at a fairly good clip, so I'd like to thank you again, and make sure you do subscribe if you enjoy watching my videos and you haven't yet. The other thing I would say, if you enjoy my videos, make sure you hit the like button and also the notification bell to be notified of all my new videos. So yesterday actually I kind of took the day off in the morning and early afternoon. What I do usually almost every day is watch the markets, do a bit of reading, see what's going on, report to you as well in the morning. But I went to play golf yesterday, so I came home in the mid-afternoon London time, and I noticed that everything was in the red. Even gold and silver came off quite a bit, but then rebounded relatively well, I would say. For those of you who might be concerned, I think gold and silver are holding quite steadily, despite all the chaos that seems to be brewing right now, or not chaos, but volatility. So, when you look at the mainstream media, you will hear talk of Nvidia. Of course, Nvidia was down 10% after the market closed. There was news that the Department of Justice in the United States had subpoenaed Nvidia. That was after the market closed in an antitrust probe. So you kind of wonder if some people knew this was going to come out, and that's why maybe all the markets had such a tough time yesterday. And what happened to the markets? Well, the Dow Jones Industrial Average dropped 626 points, which sounds a lot, but after all, back in '87, the crash of 22% was 500 points. But now it was just 1.5%. But the big loser, of course, was the NASDAQ. It dropped 577 points, or 3.26%. And the S&P dropped just over 2%. There were some economic data. The ISM Purchasing Managers Non-Manufacturing, I think, or Manufacturing Index, they came out. This number came out a little weaker than expected, but not much. The worrying part that I saw was that the prices component actually rose to like 54, which is worrying in terms of the inflation picture. But I don't think people are looking at that. They're looking for a cut on the 18th of September by the Fed. And what about Japan and carry trade unwind. Well, I've been telling you that the key indicator to keep an eye on is the Japanese yen or the dollar versus the Japanese yen, because in the run up to the troubles we had in the beginning of August, where the Nikkei dropped over 13%, the Nasdaq was down 1,200 points in the pre-market on August 5th. The dollar had dropped to like 142 versus the yen, and that was in less than a month after it reached a high of 162 about a month after it reached a high of around 162, which was like a 34-year high versus the yen. And then we had the Bank of Japan raise rates and say that they're gonna kind of taper their QE, which they haven't done yet. And the market rebounded after that. The dollar rebounded. The stock markets rebounded. But as I've been saying, keep an eye on the dollar yen. And we've been forming a classic flag. Kind of a classic flag, but you can see that the dollar is having a tough time getting back up against the yen. And the yen carry trade necessitates that the yen remains weak, because the rest of the world and even Japanese investors, what they do is they borrow in yen, because Japanese borrowing rates are like virtually zero, and they invest in high yielding assets throughout the world. And that's what gives the world's financial system a lot of the liquidity it needs. What it doesn't need, though, is a yen strengthening, because it means that all these investors, hedge funds, speculators who have used the yen carry trade, or who are kind of indirect recipients of the liquidity, they have to close out these short positions or these borrowing that they do in yen, because you don't want to borrow in a currency that's going through the roof, because you're going to have trouble covering that debt. And that therein lies the whole problem. And as you can see now, the dollar had been rebounding of late, but now it's keeling over again. And I would say the key levels to look here are the low from the 26th of August, which was around, 143.50, and then the lows from the 5th of August, which was 141.69. And that could happen very quickly. And I've seen that the Bank of Japan, the governor of the Bank of Japan, he said yesterday that he reiterated, according to Bloomberg, that the BOJ will lift rates if outlook realized. So he's been fairly tough. I think when push comes to shove, he won't raise rates if things get really out of hand, not just in Japan, but also throughout the world. Someone at the Fed or someone at the BIS is going to have a word with him. And talking about the stock market as well, today the Nikkei dropped 4.35%, or 1,700 points. So we need to keep an eye on that. And right now, the markets, as I speak here, it's 8 a.m. London time. The Dow future is down 0.5% almost. It's down 160 points. The Nasdaq is down almost another percent, or 160 points, and the S&P is down 2/3%, or another 32 points. The dollar, well, that's down about 1/3% at 144.90. So it's actually near the low of the day. So you'll be watching this video and the prices might be completely different, but keep in mind, keep an eye on the dollar yen, and the lower that exchange rate goes, the more trouble there could be ahead for the financial markets. And I noticed yesterday as well, the bond markets rallied in the U.S. Treasuries. The yield curve is still inverted by about 4 basis points. So I think the markets are worried about liquidity, about the yen carry trade. The VIX index as well is starting to pick up again. Whereas the VIX index, well, it jumped yesterday from around 16 to 20. It's still well below where we went on August 5th. We went to above 35. Keep an eye on the volatility index. That will, the higher that goes, it means the more fear people have, the less liquidity in the markets. So, yeah, as I said, I think gold and silver held up quite well. And right now, gold has come off a little bit here. It's at 24.85. Silver as well has come off a bit, about 20 cents at 27.85. But we are almost back to 2,500 overnight. The high was 24.97. And talking about gold, what I want to cover now is central bank gold buying, because there's been a report that came out yesterday from the World Gold Council. And the World Gold Council is a reputable, I guess, institution that works with the central banks. Not that I like central banks, but I think we need to keep this in mind as we move along. I think central banks around the world see the writing on the wall about what's happening financially in the West, and it's no good. And they started accumulating gold, a lot of gold in record amounts from 2022. Well, they were doing it before, but 2022 was the biggest year in net buying by central banks of gold since the beginning of the Bretton Woods system in the mid-1940s. And 2023 was pretty close to what happened in 2022. So we've got a July report here from Krishan Gopal. And you might want to follow him on Twitter or X. He reports fairly regularly. I'm not going to go through the whole article. What I'm going to do is put a link to it below in the description of this video. And you might see also in the description that I have a couple of ways that through which you might want to buy gold and help the channel. I have an affiliate in the US, Miles Franklin, and an affiliate in the UK, Gold Investments. And the reason I do have these affiliates is because I've been talking about gold and how important it is as insurance and safeguarding your savings, the value of your savings, since I started this channel in late 2015. And a lot of you have been asking me over the years, where can I get gold? So it says here, central bank gold demand strengthened in July despite price rise. Just read a few bullet points here. It says reported net purchase by central banks more than doubled to 37 tons in July. The National Bank of Poland was the leading buyer in the month, followed by the Central Bank of Uzbekistan and the Reserve Bank of India. We expect central bank demand for gold to continue in the coming months. And this is quite interesting what he says here at the end. While the gold price rally is very likely having some impact on central bank gold demand this year, the long-standing trend of net buying remains intact. This reinforces the findings from our latest central bank survey, which highlights several reasons, such as gold's role as a store of value and its performance in times of crisis. Why, despite the elevated price, central banks are still keen to accumulate gold. Based on these findings, we continue to be confident in our expectation that more buying is to come. So there you go. I'm going to stop at that. And I think that's pretty clear. And there's an old saying that I think it was Sun Tzu, the Chinese philosopher. He said, if you want to win the war or a war, first you need to know yourself. Then you need to know your enemy. But if you don't know your enemy, and even if you don't know yourself, you're not ever going to succeed. So don't get me wrong here. I'm not praising central banks, but what they do is the right thing because they want to keep control of us. They want to control the money, the currency, and they know that the only way to do it is to accumulate gold because they know what's coming for this fiat currency regime. And I knew what was coming to this regime of fiat currency, of money printing, of QE. Since the early 2000s, I just looked into it and I started going down the rabbit hole, studying gold, the monetary system, inflation, the Austrian School of Economics, something that was never taught to me at university. This is not something they're going to teach you at the London School of Economics or Harvard, MIT, or Yale, or Princeton, because they want to keep you in that fiat currency regime. That's the whole basis of the system since the early 30s is that. And since the early 30s as well, this fiat currency regime. And I know the dollar was kind of backed by gold until 1971, but it wasn't really a pure sound money system. Yeah, and I think we're long in the tooth because early 30s you got Hoover and FDR. They increased the size of the state. They increased the power of the state. And I think that's all unraveling now because fiat currency, when you have fiat currency, the powers that be always abuse it, and they abuse it by printing and borrowing loads of currency out of thin air into existence. And there comes a point where that can't keep going anymore. And I think a lot of these countries, and most of them are non-Western countries, they're seeing the writing on the wall. And that has everything to do with what's going on with BRICS, which I spoke about yesterday. So with that, I'm going to wish you all a very good day. Take care. Bye.